Hey guys, welcome to Eric Smart Live. If you're interested in the cannabis industry, this is the podcast for you. I don't know what aspect of the industry you are particularly interested in, whether it's investing, whether it's working in, whether it's products, whatever it is. You can let me know. Leave comments below, subscribe and like, and you can find out a lot of interesting and insightful things because I happen to work in this industry. I've worked on the intoxicant side in the cannabis marijuana market, and I've also currently work on the hemp side, which is legal to sell in the U.S. currently. So there's lots of interesting things happening. The market is moving incredibly quickly, and there's some amazing stories. One of the more interesting ones right now are two companies, Cronos and Tilray. These companies have one thing particularly in common. They both trade at over 200 times sales. That's pretty crazy. That's a pretty stratospheric market cap that they've acquired. The market has rewarded them greatly. And there's three surprising things they have in common that may tell the tale of why they have this market cap and why they're trading at such a high valuation. So both these companies came on the scene very aggressively in 2018, and the first thing that they both have in common is they were backed early and aggressively by the elite. So the elite in this case for Tilray would be Privateer. Privateer is Peter Thiel's investment into the cannabis industry, and he obviously invested in Tilray, brought it to the market through the NASDAQ, and had a very successful IPO. For Cronos, they were backed early by Altria. Altria is just a rebranded Philip Morris, big tobacco, so they have deep pockets to put about $1.8 billion into the company. So that's a huge advantage both of them have shared. The second thing is their leadership, their CEOs, are both from the Ivy League and from the venture capital background. One, Tilray, which is manned by Kennedy. So Brendan Kennedy went to Yale, and he worked at Privateer. So they actually stocked the company with someone from their ranks, which makes sense if they're going to put a bunch of money in it and help drive it through the market. For Cronos, they're run by Michael, let me get this right, Gorenstein. So Michael comes from University of Pennsylvania and got his MBA there, and he worked at Alphabet Ventures, another venture capital firm. So both of them have a lot of experience in seeing early and young companies going through the phases that they're going through right now. And that gives them obviously some advantages, and the market probably puts a lot of trust in their ability to manage this growth. The final thing they have in common is their websites are eerily similar. And by that, I mean grandiose messaging, not really talking a lot about product, but more about the scope of their company and what they're doing and their overarching strategy and vision. And there's nothing wrong with that. It's certainly done by other companies. But at the stages they're at and at the amount of revenue they're generating, it's a bit unusual. So those are the three things they have in common. And the market's actually rewarded them very well for that, obviously. I think that the market and investors like the pedigree of management, and they like, obviously, the quality of money behind the companies. But the question is that what's going to succeed in this market? There's no doubt these companies will most likely do very well. They're well-funded, well-run by credible people. However, an emerging market like this, something that's changing on a daily basis, really responds better to a nimble, agile company that can meet the demands of the customer quickly and efficiently. Can these companies do that? I don't know, but I will say this. If you look at their biggest competitor, which is Canopy Growth, which is held by Bruce Linton, he's more of a grassroots kind of guy, brought it up from kind of bootstrapped it early on and has been building it since. That tells a little different story. A little less pedigree, a little more street savvy. maybe that's what's going to succeed. He's certainly ahead of the curve, and they're playing catch up on the product side right now. So to succeed in this market, you can't just be an operator. You need to be an innovator. And that's the question. Will they do that? So if you're an investor, if you're looking to work in the industry, are those companies that you want to get involved with? Great management, great pedigree, probably going to succeed. But what kind of story are you looking for? Will it be the innovators? Will it be the people who truly create the market demand? We don't know, but we're going to see. I don't know if they can hold that valuation. They'll need to do that to hold that valuation. Also, a little personal note. I got a retweet by Jim Cramer today. That was interesting. I haven't put out a lot of tweets, but just started talking about the podcast, and Jim Cramer picked up on a little commentary, and he picked up on the fact that I called him out on liking Canopy growth and the fact that anyone that has $4 billion on their balance sheet is always going to look good. So I think that was a fun retweet he put out, and check it out. Thanks for joining us. Check back in, find out what's happening in the cannabis industry. Thanks.